All right, hey there. Good morning, everybody. It's a few minutes after 11 a.m. Central Standard Time here on Tuesday, March 22nd, 2022. And I'm Chris Franks with Texas West Capital, coming to you from a slightly cooler Bernie, Texas this morning. We had some crazy weather last night, not out here, but through a lot of the different areas here east of us in Texas. Had some tornado activity there in Round Rock, which is just the north side of Austin there. I've got some friends in Pflugerville, which is just south of that. And then, of course, tornado warnings extending all the way into the north side of Houston there, Rusk, stuff, areas like that, even up toward Dallas. So, yeah, crazy times. But the market itself getting kind of crazy, too. Had a great move up last night. I hope you guys haven't still been waiting for a price to drop lower. I've been warning against that for a while now. And it looks like we're finally making our way higher. So, strap in, right? Hopefully y'all are doing all right here. Jerome Powell, man, warming up to the idea of a 50 basis point rate hike. Mentioning Monday there that they would continue to monitor the situation, and if it continued, prices and everything continued to rise, and employment continued to do well and whatnot, that he would not be against a 50 basis point rate hike. Doesn't mean it's coming next meeting or anything like that, but we talked about this being possible and coming up, and if the economy kept doing what it's doing, and so here we are, it's doing what it's doing. So anyway, hopefully you guys are doing all right. Crypto Mowgli, what's up, man? Nevlusian's here. Hank checking in still from Thailand. Paul, what's up, man? Paul Fraser there. Fernando, good morning, sir. Data is here. Michael Williams is here, and Telluride is here already. Good to see you guys. Everybody else listening in. As always, you can join us at TexasWestCapital.com. We'd love to have you there. Just click on this link right here, and it'll take you to an area where you can sign up with us. Tier 3 is where it's at, guys. Our members in Tier 3 making really good money here lately with a few of the techniques that we've been teaching, every week there. So, a lot of stuff with Tier 3. Man, it is absolutely crazy what you can learn there. A lot more what you're going to learn on your own. Not that you can't learn on your own. I'm telling you guys you can, but you got to understand your trade-off there. You're going to waste a lot of time and a lot of money on half-truths and outright lies that are available all over the internet. So you're not going to get any of that nonsense with us, all right? Been doing this for, since 1995. So I've been doing this, 27? A few months here this summer, it'll be 27 years. I've been doing this. Crazy it's gone by so long. Took me the first 5 or so to really kind of, let go of the nonsense and the stuff we often think of when we're new traders before I actually really sat in and started to learn. So try not to make it 5 years for you. Or if it is, let's get it figured out now so you stop doing all that, right? Let me see here. 83 Madden, what's up? Devin's checking in. Andrew Bennett, what's up, sir? HJ, good to see you, buddy. Some Risk is here as well. Always good to see you guys, man. So here we go last night. Nice move up here. Nothing we weren't expecting. I've been talking to Discord, 3 times a day at least about Bitcoin. And, we were looking at a series of 1-2s, which turns into maybe this 1-2, 1-2, and then a leading diagonal here is a 1-2 heading up here. So right now, if we're looking at this here, what this becomes is like a 1, 2, 3, 4, and 5 heading up here, which becomes, 1, 2, 3 up here. So 3 has a minimum expected target of 44,264.90. Secondary target up here in this blue supply structure there, 44,905. So kind of making our way up there. But that's only this local 1, 2, 3 heading up there. Right here, could it, let me see here. Let me kind of zoom in a bit here. 15 minute, there we go. Could we be looking at a triangle here? Sure, maybe. You can get maybe an ABC and an ABC. So it'd be A, B, C, D, E as it, consolidates and heads up. But I don't think so. I think it's I think this right here is a 1-2 coming out of here. Or, a 1, A, B, C is a flat here is 2. We're building this 15-minute bullish engulfing right now off the 15-minute R3 pivot. RSI, Stochh RSI has bottomed out and oversold, crossed bullishly, trying to get its way out of there. You can see right here that you've got hidden bullish divergence. So, I mean, I think now's as good a time as any to probably go long on that, right? So you can look kind of here. The real low here, unfortunately, isn't the low in this right here. But nonetheless, you've still got that hidden bullish divergence coming up here on that 15-minute. So, again, looking for it to go there. I am still long from my earlier and my most recent long. My most recent long, of course, as I've shown Discord here, was, what is it? Entry at 39,345. So we're in from that. Watching this to continue going higher here. Really kind of looking forward to make it its way up here toward this yearly open area, continue higher beyond that. But anyway, yeah. So, I mean, looks like we may be getting ready to rally up here. A breakout above this swing high right here, this subwave B right here at 43,239 and 61 cents. Breakout above that will add confidence to it and say, hey, we're probably headed up here. Again, if this is 1 and this is 2 right here, potentially getting you up here around 44,723. So maybe not quite as high as the 44,905. Maybe that 44,723.65. We'll put that in there. Just depending if you get some kind of overextensions or whatnot, but generally wave 5 maybe to that area right there. Which would probably end up giving us, this 3, you pull back a 4 or 5 is going to probably get close to this EQ here then, which would make a lot of sense. Michael, what's going on, man? Mark Chenard's here. Bill, what's up, buddy? He says it's a beautifully sunny spring UK afternoon, a lovely 19 degrees Celsius, and as always being polite enough to give me the Fahrenheit of 66 degrees. I think that's probably getting on about where we are. Let me look at my temperature here real quick. Not that y'all probably care, but I do at the moment. Oh, we're not there yet. We'll get up there at some point today, maybe. Oh, man. They've actually... we were supposed to get close to 70 today. It looks like we may only get 64. We're 57 right now. But anyway, yeah, and it'll be back up the 80s in a few days. So that spring weather hitting Texas here. What's going on, Mike Slane? Chanman is here. Chris Baker. Good to see you guys. Let me see here. Telluride says, it seems right now the Bitcoin is just trying to break the monthly open with that R1. Yeah, again, it's a lot of great movement. The first thing we're looking for, we have this big triangle here, and the first thing we're looking for is a breakout above the wave D at 42,597.84. And once you do that, that's your first real clue that the triangle's complete. You get confirmation when you break out above wave B up here, which is right around 426 and 45 cents. So we're doing good here. The best part about what's happened here is we were looking at the possibility that if we didn't break out above here, that maybe wave E is still in progress. So we're getting like an A, a B, C, and it's doing a triangle itself. And I told you, I told Discord I really wasn't thinking that was going to happen because we'd come so close to wave D already. We'd really large. I would expect it to be a much smaller triangle. So, but breaking out above wave D says wave E should be complete, and we're headed up here now. Again, in this case, if we're following this, this count that I've got, we should be heading up into the mid 50s at least for wave D of the larger triangle. Remember, this was wave D of this wave X triangle. If we zoom out here a bit, remember we got this triangle, we got B, we have C, and then your triangles are 3 waves. They're corrective. So this one, it's a W, X is a triangle, and then Y heading up here. So that's kind of where we're looking at the moment. Daily looking sharp. Let's go right here. Boom, there we go. So daily has this nice move here. So it gets rejected, or it finds resistance at the pivot, breaks out above it, gets rejected at the previous swing high here, this resistance, pulls back, finds support at that pivot area, slightly into this wick here, which is demand, and then today just breaks on out higher, nice large bullish engulfing candle, heading on up there, breaking out above that resistance and wanting to push higher there. As I told Discord, don't be too concerned. We talked about it a few days back here that we were having this bearish cross up here in Stochh RSI and overbought. And I said, don't be too concerned about it because we had this over here which was this. And I said, and so I would expect that we're probably going to follow through and do the same thing and get something like this. And so here we go with the start of that, right? So this area being the same as this area right here. Stochc RSI, same kind of thing going on. So we'll see if we can get some follow through there and continue to make me look right there to get that. But nonetheless, good move here. You know, we're up on top of all this support right here and trying to break on out. So that would be definitely what we want to see there. Hank says rainy season starting there soon, so moving to Bali. You have to post some pictures out there, man. Some of us have to work. We don't get to go to Bali. Genghis Khan, what's up, buddy? Good to see you, man. Job TV, what's up, man? Spiral Architect checking in there. Good to see you guys. So yeah, I mean, you know, again, Bitcoin's looking good at the moment here. You know, again, always look left, guys. Always look left. And you can see right here that this previous area of support resistance kind of in this area. See how it works right here? You get this resistance, support, resistance kind of thing. And we're breaking out above that and heading up. I mean, if we're looking at the chart here, our next real target is kind of this 40, you know, about 47 to 48,000 area, maybe even 49 up here. This high volume node, that's the next thing. So, I mean, most likely we'll probably head up into that, pull back a bit, and then break out of it, and then pull back to it again, and then break out through the next one. That's more or less how it often works. So, you know, you can kind of expect good resistance here at these higher volume nodes. But, you know, I mean, that's what you want to see. You want to see that stair-step kind of movement because you're giving yourself support and you're breaking out, coming back to that support, and then finding more volume to push yourself up, more demand, right? So, again, you break out here, you jump up into this high volume node, and you get rejected at first. You come on back down to this previous area here, and then you grab, you know, you get more support down there, and then you break out through it and head up to the next one. Pull back to this previous one here where you already had your break, you know, your push up and pull back, then break out again. So, you know, up, down, up, continuing up like that. I continue to believe that we're probably going to hit, you know, a good high this year. Probably sooner rather than later, especially with what's going on with Jerome Powell there and the Fed. You know, we'll see how it follows through. Remember, guys, just because he said it doesn't mean he's going to do it, right? So it's not like he said, oh, yeah, we're definitely raising it 50 basis points. But he said, you know, listen, if this stuff keeps on doing like it's doing, then I don't have a problem raising it on a faster scale like that, harder and faster. So, you know, as long as the economy keeps on doing what it's doing, then I think we can probably expect to see that. Now, the market itself's already kind of priced in that the next, I think they're looking at about 6 more quarter point hikes coming in. So they've already kind of added that in, you know, priced that in. So, you know, a 50 basis point hike, you've got some people kind of teetering on that. Some people kind of, yeah, maybe in the market there. It'll still kind of take the market by surprise if it does right now. But if Jerome keeps talking about it, Powell keeps talking about it, then I think the market will start pricing it in as a, you know, a really large possibility. But we're going to have to see how CPI and unemployment does, the jobs report for next month, you know, from this month, how that comes in next month. I think to probably get a better idea about that. Let's see here. Andrew says the upward trend's been going since November of 21. What are you talking about here? Gonna catch you. Where are you at here, man? I know I just saw your comment there. Upward trend been going on since November 21. No, we've had downward trend been going on since that. That moved down here. Maybe that's what you meant. But overall, this has just been sideways, guys. Again, let me make you zoom out a bit. Pay it. You know, it's okay to trade, and you should be trading the smaller time frames. You know, not 5 minute, but you always need to still zoom out and say, okay, well, what is price doing overall? And this is what price is doing overall. You know, this is since January of 21. You know, we've just been going sideways, guys. So that's over a year now. A year and a couple of months, you know, going on, 14 months now that we've just kind of been going sideways here. So, you know, your swing low down here, swing high up here. So basically what you have here is you have your preliminary supply coming in. You've got your buying climax, you've got your automatic reaction, which really is just your local selling climax here, because I do believe this is a reaccumulation here, as I've been talking about. The volume kind of suggests that's what's going on. And so then you get this thrust up here, you get this pullback, you've got a higher high, which most often leads to a higher low. So you get an LPS, a last point of support, rather than a spring. Not always, but most of the time that's usually what you get. If you get this breakout here beyond your buying climax, that usually just leads to, your selling climax, and then this higher low here being your last point of support before you're rallying up here. You've got all your supply right here, right? You've got it all up here. And so what you're going to look for is this area right here is where you're probably going to get a nice large candle and a huge bit of candle spike of volume. And that's going to be your jump across the creek. And all that really means is that your price is going to break out through that supply, that resistance that's sitting there. So it'll probably be right up in this area. Again, a lot of times when things are at the bottom here, people say, oh, the volume's so low. How's it going to go up? How's it going to go up? The volume's so low. Look at that. Well, it's because they don't understand how, volume and price action works. And so when you expend all your supply coming down, it doesn't take much to push it up. It just takes a little bit of demand to push it up. But where you see people jump in is when you get toward that resistance to where you can break out higher. This area right here. And you're going to get the people that are going to either buy the breakout or they're going to try to jump in right before the breakout. And that's why you get that volume really kind of kicking up as you break out through here, because it takes volume to get through that supply. But that becomes what we call your jump across the creek. And most likely after it'll pull back to that area where it broke out, back up the edge of the creek, and then we'll head up higher after that. But again, looking at this as an A, B, C, and then W, X, Y will give us D, and then 3 down will give us E, and then the triangle should be done and heading up. I don't know. Based on what we're seeing right now in terms of the economy and what's going on with everything, I think, if we're still just getting to the end of this bull cycle, then I think it ends, this is what I said before. If it didn't end in December, then we're probably looking at summer, right? And I think that makes the most sense. I don't think it makes a lot of sense necessarily to hang out till the end of the year. I'm not saying it can't happen, but once we get and break out through the triangle here and head up, I think it's pretty quick and fast up through that to maybe finish it out. We'll see. I don't have a problem with it lasting until the end of the year. It means, I'm always buying Bitcoin as far as, for my long-term hold, almost on a daily basis. But, so for that, if it lasts longer there, then I've got less profits that I have to submit for, short-term capital gains. And that's always nice. So I definitely wouldn't mind it if it did hang out, through toward the end of the year, or even if I don't know, maybe something crazy. Maybe this is the beginning of something new, and this is actually the bear market, and then this is the beginning of a new bull market. That'd be crazy, man. But I'll tell you what, I would love that if that happened, because man, oh man, the money we could make, right? But right now, I think we put our odds to what's most likely to happen, which means, this bull cycle coming to an end. And if it does, probably summer rather than the end of the year. But again, we'll continue to watch as it plays out, and we'll see how that goes. Either way, I think, we've still got further upside, and new all-time high and whatnot. Let me see here. Okay. When you were talking about the uptrend since November 21, you're talking about the daily dominance on Bitcoin. Yeah. Okay. Sure. Let me see here. What's going on, Block Tech? Good to see you. King Crypto checking in. Sorry I missed that first one there, Andrew. Let me see here. Let me kind of catch in with you guys. Let's see. Fernando, what's up, man? Oh, well, I bet, I appreciate that, man. I don't know that I'm the best or anything like that, but, it's really about risk management, guys. At the end of the day, no matter how long you've been doing this or how, often you get it right, you're still going to get it wrong sometimes. And so risk management is what really saves you. Risk management is the difference between being, the guy who makes a lot of noise during a bull run, but then loses everything and more during, a bearish pullback. So, yeah, it's all about that risk management for sure. Let's see here. Am I anticipating a new high? Yes, that's what I said. Yes. I expect us. I mean, based on the price action right now, minimum expect is something like 94 or 96,000. But again, I expect Bitcoin, if we're going to get there, we're going to break 100, I believe. And maybe quite violently and head up much, much further. So we'll see how this plays out. Once we get through the triangle here and we start, pushing our waves up, we'll see how that kind of starts adding up, counting there to get a better idea of, where we're kind of headed with that. So yeah, Leo, what's going on, man? Good to see you here. So yeah. Nothing surprising. So again, Bitcoin just kind of doing what we're expecting. Same thing I've talked to you guys about. There's been a lot of, overlapping price action here after this consolidation locally, and then the larger consolidation. But again, nothing screaming that that's the top and we should come down. Everything's kind of saying, well, I think we're probably headed up higher here. So we're looking for a breakout above, this swing high here to really kind of set us heading up here toward, minimum expected secondary target up here for wave 3. But ultimately looking for price to continue up beyond the yearly open. I don't think you need to just trade this wave 3 right here because of all this overlap. There's the possibility there could be more subdivisions going on there, or missed a subdivision somewhere in there. So, I prefer to go out a couple of degrees and just kind of, allow price to do its thing within here. Again, I've been in this trade since 39,345, which was over here in this area. And so watching what is going on, not interested in getting out until we get some, a real pullback along the way there. So yeah, let's see here. Let's see what else we got going on here. GBTC, Grayscale Bitcoin Investment Trust here. As you can see, rallying up here in this ascending channel. Kind of just hitting just about this EQ here, looking for a breakout of this. So once we get a breakout of the EQ, we should be rallying up into the top here, which gets us about mid-range of this supply right here. So that makes a lot of sense right there around 36.20 or so. 36.30, 50, right in that area. I think it's where we go before we get a bit of a pullback. That almost gets us, that kind of same area we were looking at, that high volume node I was talking about on Bitcoin. It gets us about that same area here with GBTC. And so then we pull back and then we break out higher toward the other high volume node, pull back and then break out through that. So yeah. So that'll get us our D on the break up here to give us E on the pullback. And then, that'll be done with that triangle on Bitcoin. On Bitcoin, not here. We don't have a triangle right here. This was the A, B, C down here, done, heading up now. Let me see here. Pivot points are reliable all the time. Does that mean price is going to stop there definitively? No, not at all. All the pivot points do are they give you an area of previous support and resistance, which gives you a good gauge of where you should be looking generally for prices to at least target, if not blow through sometimes. And usually when they blow through, they'll come back and retest it as support or resistance, depending which way it's going. But yeah, pivots are fine on all time frames. Yeah. Let me see here. DXY, dollar. Here we go. Boom. 3 down. We've got 1 up here. Looks like maybe like a 1, 2, and then 1, 2, 3, 4. And then we've got, oh gosh, let me think. How was this? 3, 4, 5 is what we got here. So we got a 1, 2, 3, 4, 5 up here. We got an A, a B, and a C. We're looking for a breakout of 98.805. That's that wave B resistance there. If we can get that, that gets us a minimum expected wave parentheses 3 target up here at 100.327. As we continue working up there, this has just been what appears to be reaccumulation in this area as we're heading out. And so, again, I'm also short. You guys may know that if you've been following me. You know I'm short the Euro USD. Let's see here. We're at about 115 pips, 116 pips profit now. Got in short at 1.11295. I think we're up to like 150 or 160 or something this morning before the three-wave pullback we did right now, but heading much lower. We should be able to get at least 400 pips out of this short on the euro, at least. So looking for that and more probably there. Excuse me. What else we got here? We got oil, guys. Oil hitting just about my target up here. We were looking for a pullback toward this wave 4 resistance right around the 61.8. Just shy of that. Starting to fall back down now. So looking for it to break down. What we're looking for really here is a breakdown below wave B support here at 100.96. If we can get below that, that adds confidence to the count, and it says, hey, wave 3 is probably in progress, heading lower there. Got a wave 3 target down here around 54.70 right now. So we'll see how this plays out as it does. But man, yeah, big move down here. Like I said, I think I was talking about this last time, guys. We had this drop off from this high here. 9 days, 20 hours, so about almost 10 days. But in that 10 days, it dropped something like, 26% or something? 28%. Look at that. So big move down, short amount of time. Remember, that all-time high was back over here around 140. Oh, I'm sorry, no, up here about 147.09. And that was back there on July 11th, 2008. Y'all saw that, right? July 11th, 2008. What happened just a few months later? Well, we were kind of already getting into the, really starting to get into the great financial crisis about this time, right? That was the summer. Remember Lehman Brothers? Everything happened there. So it's interesting. You may not think so, but I do. That we hit this high up here at $130.50 as we're looking at what is probably the top of the rally since then. Right? So, yeah, again, looking for this to continue lower here. And remember, after this point, if we zoom out there to that point, actually, let me zoom out here weekly. There we go. There's a better picture of it. And so we were, boom, down there coming up, right? So, we were 1, 2, 3, 4, 5 waves down. Hits that negative 40 and some change for that May 2020 close on oil there on WTI. And then we've had what looks to be 5 waves up since then. So, yeah, again, looking for the larger pullback as we work through here. So we'll see how far it actually pulls back, how far we go there. But right now, definitely looking at that as likely at the top, which will give us a little bit of reprieve in prices. If you guys are having to fill up to drive to work every day. I just filled up my truck, actually filled it up the other day, this weekend. I had about 30 gallons. I paid about $123, I think is what it was. So, I haven't been filling it up too much lately because I don't really drive around a whole lot other than those trips to Houston. But man, oh man, yeah. So, that wasn't a whole lot of fun. I feel for those of y'all who are having to drive to work every day. Luckily, I can do this from my home office. When Corona came in and everything, ended up not getting an office space, which turned out to be, actually a blessing here. So, I do all this from my home office and don't have to actually make those trips every day. So that's nice. But man, I got friends that drive a lot every day, and these gas prices are sucking wind for them. So yeah. Silver coming down again. Talked about the swing high being up here, probably wave 2 done at about 27.5. So far, that's what it's saying. Right now, we've got I've got this as a 1-2 heading down as maybe a 3 in progress here. But overall, this is just 3 waves down. So we need to see it, 5 waves down, dropping below this swing low here at 24.55. And then that'll say, yeah, we've got that wave 3 in there heading down toward a minimum expected 22.715. Right here, it looks like maybe we got a 1, 2, 3, 4, 5 still coming in, as it does. So it could be 1, 2, 3, or, 1, 2, 1, 2, 3, 4, 5. We'll have 3 heading down lower here, just a bigger subdivision of wave 3. Gold looking pretty much the same way, guys. Again, top up here, all-time high, $2,089 and $20. We came up to, what is that? $20,078.80, and it's making a big argument for that being a wave 2 and heading back down for what we're looking here. Let me see here. Let me kind of zoom out a bit. Yeah. Yeah, so this being a 1 down here and then a 2 up. And then potentially coming on back down. Coming down here. Through this, if you're dropping through this 1770, 1780 area here, this high volume node, if you're bullish, you don't want to see that, because that's going to become really difficult to get back above it all of a sudden, because you've got all this resistance right here that you'll be under. But once you drop through that, you're really kind of looking at this 1500 area here next. And once you're through that, you're looking down here around this 1300 area right here. And so, those are just your big trips along the way. Possible double top right here. If this is a double top pattern-wise, just a quick pull here. Double pattern targets right down there around 1339. Pattern targets are usually wave 3s. So again, if this is one here heading down, again, that wave 3 right there, just a bit above it. So, looking for it. I mean, you can have your wave 3 here. Maybe you get a shorter wave 5 right beyond that pattern target there. That gives you your A. You'll get your B up, and then you get your C down, breaking down. Remember, my call, for quite a while now has been to see gold head down below 1,000. So I'm going to do that. Usually the argument I get with that is people that don't really have any background in economics or stuff like that, just kind of regurgitating the sound bites and stuff that they hear online. I don't know, I don't want to offend you guys, but you get so offended because I say, it's going down like, oh no, it can't possibly do that. I don't know. We'll see what happens. So far, it's doing what's expected. So, we're looking for this minimum expected wave 3 right here at around $1,887.40. That'll get you right to this daily pivot area, which is just above that at 1889. So, again, a breakdown through the daily pivot, you should head down lower, right? Kind of just walking on that. Hank says spot gold was a new all-time high recently, so it can't be a 2, except it is a 2. Go figure. It's funny how that works, right? It's a 2 right here on gold futures. I don't know about spot gold. Let me see here. What's today? 22nd. Oh, what's that spot gold ticker? Anybody know off the top of their head? Let's see. And you talking about this one right here, like tvc.com here? Let's see what we got here. Yeah, XAU USD. I don't know why I'm not even thinking about that. Let's see here. I guess we'll look at Oanda here. Yeah, on Oanda it did break out higher. Sure. But this was, let me see here. Is it breaking out higher beyond this here? This was the high right here at, what is that? 2075, 282. 2070. So you're right here. So this is a 1, 2. Yeah, it's perfectly fine. I don't know why you're saying it can't be a 2. This is lower than this. 1, 2. So, yeah. Unless you were thinking 1, 2 here. And that is what we're talking about. As I showed you on the chart, we're talking about from this point here, the all-time high, 1, 2. Right? So, yeah. So, definitely possible for this here to be 1, 2 as well. Because this is shorter here by like $5, right? 2070, 2075, yeah. 1, 2. Let's see here. Matter of fact, it looks like it's probably a triangle for wave B here. So A, B, C, D, E is B. Maybe. Let's see. Maybe not. Could be just A, B, 1, 2, 3, 4. 1, 2, 3, 4, 5. Probably more what it is than a triangle. Yeah. Hank, I'm looking right here. Oanda, Forex, XAU, USD. I mean, I don't know what else to tell you, man. This right here. So, yeah. It's right there. Unless you look, what other exchange are you looking at, Hank? Tell me what exchange you're looking at. Because again, I'm showing you Oanda right here. That shows it is what it is there. See here. Oh, let me kind of... I haven't seen Arthur Hayes' article. I don't keep up with Hayes. You'd have to send me a link to that. I have to check it out. Did I see the news on why crude oil is dropping and what do you usually look at to tell if it will go up or down? Chris is asking. I don't look at the news to tell me what's going on with prices. News is always after the fact. Again, we tend to associate news with price. News and price action happens all the time. And they happen together all the time. We just usually tend to associate it when something we think is significant is happening, when we're paying attention. But news doesn't change the overall trend or what's going on. Oil's coming down because it's rallied from negative $40 to $130. That's why gold's coming down. Oil's coming down. Maybe there's some short little knee-jerk reaction going on right now with the news event. You can get that, but the trend is down because oil is rallied up $170. That's why it's going down. You can't, you've got to get a pullback. Yeah. Yeah, TV Canal, I already talked about the triangle on Bitcoin. You can scroll back to see that. But yeah. I don't know that Wavy is going to go all the way back to 40 or 43, though. Especially if we make it up to 55. I don't think it goes back that far. Not my initial thoughts, anyway. What are the chances gold is a cup and handle? This right here says very little chance. Again, with the cup and handle, you want to see price hovering around the lows. You don't want to see these large pushes up into the cup like this. This all but guarantees that it's not a cup and handle. You need to have them down there at those lows. Let me see here. Common Man, you're off work today? It was a good day, right? I'm not. As you can see, I'm here, right? Let me kind of catch up with you guys here real quick. You happen to have the only exchange where the recent gold high was an all-time high. What exchange is it, Hank? Tell me what exchange it was, man. I'm interested because it's the only one. Because, as we saw there with even the paper, futures is not there either. So I'm curious which exchange sent that up above that. Let me see here. Let's see here. Common Man, you think gold's going to chill between 1,800 and 2,000 for a while before it breaks higher after a year or more? Now, see, I don't think so because it's already been sideways here since basically July, August of 2020, right? I mean, look, this high was right here in August of 2020. So we've already been going sideways for more than a year. We're not going to get this simple little push up and then sit sideways for another year before it goes up. Not usually anyway. FX Open? I don't know that I've ever even heard of FX Open. Let me see. I'm curious now. Oh, these are contracts for differences. Okay, I see what you're doing here. That's probably where the issue is. Yeah. That's really weird. Man, I think kind of really popped up higher there, didn't it? But yeah, definitely a reversal looking candle here for that weekly. And then you got confirmation of the reversal with this next weekly candle here. You should definitely be looking to head on down. How would that be? Let me see here. So again, looking at maybe an A, and then an A, B, C, D, E as a triangle for B. 1, 2, 3, 4. Yeah, I mean, that could be just, 5 up, ending your A, B, C as a flat correction here, Hank. I'll bet you that's what's going on with that. Because again, you can start out the same here as what we got on everything else, which again is that A and then a triangle here for B basically. Or, W, if it's an ABC for W and then an X. And then you get, 1, 2, 3, 4, 5. And then, so that gets you, A, B, and then, 1, 2, 3, 4, 5, ending diagonal is C of Y of B, right? Let me see here. Like I said, I don't keep up with Arthur Hayes. I haven't read his article, so you'll have to give me a link there of where it is. I think gold 10,000 right now doesn't make a whole lot of sense. I'm not sure if Bitcoin at 1 million makes a lot of sense at the moment either. I think I could probably see Bitcoin at 1 million before I see gold at 10. Yeah. 2 times top on gold, time to start run. Not sure what you mean there. You think that this right here means it's got to go up higher? Not sure. Those of y'all thinking about hyperinflation or whatever, again, guys, understand, I get it. You're young. You haven't been through the markets before. You haven't been through this stuff. But I'm here to tell you right now, every single time we get this same argument that hyperinflation is going to come in the U.S. We had it back in 2008 or 2010 when Fed started quantitative easing. We're having it again now. We've had it prior. It's not going to happen. It's not in the cards anytime soon. It takes a lot to do that. And right now, the U.S. dollar buoys the world's currencies. When you look at how deeply it's interconnected within the global financial system, you would understand that it makes no sense. And so, I get the draw, especially if you're into Bitcoin and you want to believe all the nonsense about Bitcoin's the new world, global world currency, going to be that and this and that and whatever. I get the draw, I do. But honestly, again, if you'd been in the markets for the last 20, 30 years at least, you'd know exactly what I'm saying about the idea that this is always the way it is. It's always this, hyperinflation's coming. Oh, it's the end of the dollar. They've been romanticizing the end of the dollar since the 70s, guys. Those of you arguing for hyperinflation, understand we are nowhere near the inflation that we saw in the 70s, which is nowhere near hyperinflation. So how could we be getting into hyperinflation now when we're not even near there? The other way you think about it is you can't have hyperinflation when you have an increasing demand for that fiat. And, with the dollar continuing to rally over a year now, we have increasing demand for the dollar. It continues to increase. So you can't, what you need for hyperinflation, just to kind of keep it really simple, is you need an astronomical printing and a significant decline in demand. You have to have them both. You can't have a significant printing and an increase in demand and expect to get hyperinflation. It's not going to happen. You can print as many dollars as you want as long as people want them. and people want them. Again, as is shown through the charts and what's going on there, right? As a matter of fact, we've talked about it before. The Fed is looking at potentially having to open up swap lines now with some countries because of the lack of dollar availability. Yeah, definitely a much better chance of stagflation for sure. I still think we're going to hit deflation. There's articles already talking about stagflation beginning in the real estate market and whatnot. But I think it's really just a product of the fact that the top that we're at is such a significant top, much more significant than 2008, than 2000, much more significant than, 1987, all those times, really significant top coming in. So it takes a while to turn things around. And so you get intermediate processes. So you have increasing inflation, and lowering productivity, so you're getting kind of like a bit of maybe some stagflation. But I think we still kind of hit that deflation. And then I think maybe we hit maybe some sort of stagflation, maybe a little bit longer term, stretch out that bear market quite a bit. That's kind of, that's been my argument for a couple of years now. I still think that's probably the way it happens. But, we'll see how it plays out for sure. Let me see here. So yeah, into the petrodollar again. I think it's just, honestly, I think it's just a misunderstanding of what's going on. That's all. I don't try to make anybody feel bad because, they've got a different point of view or something, but let's be real. If you've got a different point of view and you really have no structured economic background, education, again, guys, it's like saying, okay, well, I've never studied car engines and my car's making this sound, so I think it's this. And your mechanic is telling you it's this, and you're like, no, I think it's that. I mean, it's kind of the same thing, guys, But, people tend to get really butthurt when you say something like that. Yes, I said butthurt. They do. And I hate that. I hate that people get that way, but, what are you going to do, right? I mean, I'm going to sit here and, hold your hand and spoon feed you and tell you, yes, you're okay. Your opinion really matters. Guys, honestly, it really doesn't. If you are not educated in that particular subject matter, then your opinion really holds no weight at all. But, we're just in this world today where people seem to think that their opinion absolutely has to matter because they're valuable or something, I don't know. Just because they can say it, they think that it needs to matter. It doesn't. My opinion about car engines doesn't matter. And I've got a little bit of experience. But really, when it comes to talking to an ASE certified mechanic, yeah, my opinion means squat. I would never tell them and go, they tell me, here's what's wrong with your truck, Chris. And I say, well, you know what? I think it's this. And my opinion matters because, it's there. We can agree to disagree. And I'm not going to say something stupid like that. They're clearly more qualified to tell me what it is. But, again, this is the one big problem that we have with traders that are new to, markets and, global economics and, all this kind of stuff. Does that mean I'm going to be right all the time? Heck no. I'm going to be wrong a lot probably. But the idea is at least that when I'm saying something, it's based on, an understanding or at least some sort of understanding of what's going on. It's not based on, you'll never get something from me based on sound bites or some other nonsense like that most of crypto Twitter tends to, to do. So I don't do that. But yeah, let me see here. So we'll see what happens here. I mean, like I said, everything's kind of lining up for what we're thinking here. If we jump on over here to even the stocks here. So this is, the count here for the NASDAQ composite. Looking at basically a 1 and a flat as a 2 here. We've just about hit that 50% retracement area. If it goes up higher here, we'll be looking at wave 4 up here at around 14,505 if it continues higher there. But really kind of looking this as 1, 2, and then kind of heading on down in 3. Top being up here. Remember what we talked about with oil? And how it hit its top up there in 2008? Let me see. Do we even have it on this chart? Let me see here. Yeah, so 2008, right? So we were looking at oil. What did I do with that? Yeah, there it is up there. July 11th, 2008, right? Let's do this. July 11th, 2008. That puts us right about kind of this area right here before you had that big drop. That was the high in oil right there. And so, you know, you had this top here prior by how far? About 259 days there. Definitely not quite that different, that much here. That's January there. So definitely not as far away as that. But nonetheless, the idea that maybe we're heading into a wave 3 here on a drop would make a lot of sense. It'd be a big move down, kind of like what we saw at that point. By the way, this is the S&P E-minis here. So we've kind of hit my target up here at 45.07. We've hit that, so we'll see if we can get this pullback now. First thing you want to see is a drop down below this swing low here at 44.15. That'll hint that wave 2 is probably complete. Dropping through the pivot here, the 1 hour pivot, which is basically the daily pivot, as you can see here, around 43.52. That'll be your first real big clue that wave 2 is likely complete. But you need to break down below wave B over here at 41.29.50 to confirm that and to add confidence to it and head down lower. I've got this right now as a 1-2, 1-2, and I think that may be what it is. If we were to break out above this wave 2 here, I think we'd probably get 5 down. So this would just be a 1-2 like what we saw on the NASDAQ composite. But right now, 1-2, 1-2. So this would be a 3 of 3 wave coming down. So a third of a third is a big wave, a lot of volume. So that's what we'll see if we can get. And Dow Jones, again, same idea here. Dow Jones looking at a 1-2, 1-2 here. All of them doing this flat correction. We've, looking for it potentially to push up a bit higher here to around this 78.6 area at about 35,032. Looks like we got a 1, 2, 3, 4. So get a 5 just a little bit up here. So we're looking for a breakdown below wave 4 here at 34,341.81. That's going to hint that wave 2 is probably complete. But we need this breakdown below this wave B triangle support here at 33,245.14 to add confidence to the count. And, of course, then that'll get you this wave 3. Oh, wave 3 of 3 target here at about... And if we get up there, down here at about 29,304, finally breaking 30. And then that'll lead to this larger wave 3 maybe down here further down toward 28.3 or so. Let's go ahead and put this up here at 29,305. And we'll see if we get that reversal and heads on down toward that area there to give us that third of a third kind of thing. But yeah, I don't see a lot of excitement for further upside. You've got a lot of sideways here, which is more indicative of a wave B, not a reversal heading up. You usually expect those reversals heading up to be more impulsive. But like I said, just a lot of sideways. So we'll see. Let me see here. What am I going to buy if the big drop comes for a long-term investment? Oh, it depends. I won't be buying for long-term anytime soon. We're going to wait and see, because I think if this is the top that I think it is, then that bear market is going to last a while. It's probably going to last over a decade. And so I would want to see how that is going to define itself. Are we going to get a larger drop, or are we going to get more sideways? That's what I'm interested in. But in either case, I can say I'll probably be buying real estate. I'll definitely be buying real estate, as a matter of fact. But as far as what we're looking for here, going to look for companies probably that are strong, that have been in. I mean, if you're looking to get into something, you're going to have to find companies right now that have not a lot of debt. You're going to look for companies that have a lot more cash on their balance sheets. You don't want to be looking for debt-ridden companies right now, because this comes down with the rising rates of interest. I've explained this before. A lot of companies took on significant debt. They put out a lot of bonds here. During they sold a lot of bonds there during, this last couple of years, right? Because the government was backstopping them, right? And that's no longer. So now they've got all this debt, and so rising interest rates makes it more expensive for them to pay back that debt. So their extra money now has to go into servicing debt rather than expanding or better production or becoming more efficient or whatever. The other part of that is that with rising interest rates, that should decrease demand for their products and services. And so now they're making, they should get to the point where they're making less money and having to pay more of what they are making to service their debt. Those are the companies that are most likely to go under. So you want to look for companies that have significantly less debt and much more cash. Those are going to be the ones that can pivot and move ahead, if we're getting what I think we're getting here in terms of, the economy and the markets and everything. So we'll see who wins out on all that. A lot of companies took on a lot of debt. And if, even with a quarter rate point hike for the next 6-7 times, I mean, that's still a significant increase in how much it costs them to pay back that debt. And like I said, if you're putting on top, if that's happening, that's going to decrease demand, because people aren't going to be able to go out and take all this loans and credit and whatever. I mean, first of all, they have to pay their own stuff back, which is getting more expensive. But then they're just going to have it. And then, there's going to be less people able to afford it, as companies then have to, because there's less demand and they're making less money, and the money that they're making, more of it has to go to debt. So they have less to pay people. So they have to shrink down, right? So then they start laying off people. So then there's less people out there able to buy, because now they don't have jobs, or they might have a job, but they're worried that they may lose their job. This is how this big old spiral happens. So again, if you're a company that's sunk in debt, and you get into this large interest rate hikes and whatnot, I mean, that screws you pretty bad. And that in turn, of course, makes slows down the economy. So yeah. Let's see here. Why do we pay taxes when they print money? Taxes are a form of, you can think of it as a form of control. So not only control of the monetary supply, but control of the people. Yeah. So I mean, modern monetary theorists, MMTers, would argue that you don't need to pay taxes because the government can, the Fed prints the money. I still don't buy that completely. I think there's holes in what they say, but it's too much to go over, in this even somewhat lengthy of a thing that I do here twice a week. But I may actually start delving into that with the weekly newsletter, which is just about ready to get going again here. It's taking a little bit longer to get going, but we're going to look at stuff like that and socioeconomic theory and the bigger things that can help you get a broader understanding of what's going on around you, rather than so much, here's the chart today. We're all chart monkeys, right? We can all put these charts out all day, but the more you understand about what's actually going on, with everything and how things actually work, the less compelled you'll be to scream hyperinflation right now or something silly like that. It really is silly, guys. And if it hurts your feelings, I said it's silly. Well, it is what it is, right? I'm not trying to hurt your feelings, but at the end of the day, you got to, it's called a spade, right? Hyperinflation makes absolutely no sense right now. Now, people are going to argue it does because, the Fed's printed all this money, and 80% of the dollars in circulation today were printed since 2010, and, all the other nonsense. But again, it doesn't matter how much you print if the demand is still there. and the demand is still there. And these people have no clue what the euro dollar market is or what it even means or how it plays in with everything. They don't understand credit basis swaps, and the spread on that and how that's widening and why that's important and what that means. So just understand, anybody that's saying hyperinflation right now really doesn't understand the stuff they need to understand to even say something like that. So I would tell you guys, don't worry about hyperinflation. It's not coming. Yeah. Let me see here. I forgot that some people think that $10 a gallon is hyperinflation. Yeah. Again, the people get all riled. It's easy to get riled, guys. And sadly, a lot of the, even if you're not hearing it from somebody else online, maybe you read an article where some journalist is saying, oh, hyperinflation, this is what I mean, all this. You got to understand, a lot of those articles, most of those are written just to get you to read them. They're written so that you read them. Go figure, right? They're not out there to tell you, what's realistic or whatnot, what's really probably going to happen. They're out there to hype all the stuff that's going to get you interested in reading so they can make money on either you subscribing or if they're running, their advertising model there so that you can get, eyeballs in front of the advertisements and then get paid that way. That's what it's all about. It's about consumption, guys. It's not about talking about realities and what's, likely to happen, stuff like that. So I hope you guys understand that, or if you don't, I hope you understand that now. It really is. Or $800 nat gas bills in Italy. Man, I know, and nat gas continues to go up, right? Oh, geez. I think we're just about $6 heading up that way. So, and we've got higher coming in as far as nat gas probably. So, yeah. Speaking of what Hank's saying there, I had somebody try and argue with me that it was hyperinflation because, they were trying to argue hyperinflation of the dollar against other currencies. No, hyperinflation has to do with a persistent, significant monthly increase in the general cost of goods. So we're talking about generally a 50% month over month persistent rise in the cost of goods. So if gas was $1 today, then a month it'd be $1.50. A month from then, it'd be, $2.25. And you're looking not just 1 month and not just one or two things. You're talking about generally everything rising at least 50% a month after month for a period of time, for a continuing period of time. Guys, we are nowhere near that. We're talking about what? 7% in a year? That's nowhere near 50% in a month, right? So again, when you come at me with the hyperinflation nonsense, that's what I look at. I go, well, obviously you don't understand what hyperinflation. And then the response is always, well, it's just starting. So you're wrong. You've been proven wrong now. This didn't age well. You're proved wrong because it's just starting. Again, the dumbest thing, guys, don't do this stupid stuff. You make yourself look dumb. Don't do that. Don't say somebody is wrong when something hasn't been disproven, that they've said it's been disproven, right? You can't say, oh, it's just starting. 50 years down the road, I'm going to be in 50 years down the road, I'll probably be dead. But, if I'm alive, maybe I'll still be on Twitter and some guy will message me and go, see, I told you 50 years from now. Craziness, guys. Don't do that. Don't be silly like that. Mind yourself online. Don't make yourself look dumb when you don't have to. It's just silly. People do it because they hide behind fake names and avatars and whatnot. And then they sit there and their retort is always, oh yeah, whatever, or something silly like that. And if you wonder why I often don't respond to nonsense, it's because that's it. There's no way I can win that. It's not that they really win. It's just that, they snuff you out with dumbness, right? with silly responses and things that don't mean anything. And they jump from point to point to point, When you say, oh, yeah, look, well, here's what you're saying why I'm wrong. You say, okay, well, here's why I'm not wrong. Look, this is what's going on. Here's the chart. And they say, oh, well, I didn't mean that. I meant this. Such nonsense, right? How can stocks react when we get stagflation? Go sideways? More likely than not. If you guys want to know what stagflation looks like, look at Japan. They've been in stagflation for quite a long time now. So if you look at them historically, that's a good place to start. Let me see here. USD needs to devalue against other currencies if there is hyperinflation in the USD domain. Yeah, if the dollar is hyperinflating, then you're going to see it as a result be worth less than other currencies. Because who's going to want to hold a currency that's going into hyperinflation when you can hold another currency that's not? Right? I mean, that's the idea, right? So if the USD was hyperinflates at some point, it will necessarily show itself in relation to other currencies. Because nobody's going to want to hold a currency that's devaluing by whatever percentage every month consistently, right? Some huge percentage. It's just crazy. Because if prices are rallying up like that and you're printing all these dollars to pay for them, yeah, it's just not. Yep, lost decade, 1990s, Japan. And they haven't done much since then either, unfortunately. So, yeah. Let me see here. So, yeah, again, so stocks look like they're probably headed down lower. Gold and silver looks like it's headed down lower. Oil appears to be headed down lower. The dollar and Bitcoin seem to be the ones that rally right now. And we'll look for them both to kind of continue up. Again, Bitcoin, how could it do that? Well, if it's in the later stages of its bull market, again, it's got that one potential wave up left to go. During that time, the dollar continues to get stronger and stronger. People are out of other markets, but they're in Bitcoin because, in Bitcoin and crypto, you see such large opportunities for profits, right? Large profits, right? It's a newer thing. And so, that's going to draw more money to it in that way. So it may take it a bit longer to respond to the economy. But remember, things aren't responding to the dollar. Your stock market, Bitcoin, stuff like that isn't responding to the dollar. The dollar is just this, again, it's that proxy for what's going on with the general, how the market's feeling. Are they feeling risk on or risk off? If they're feeling risk off, dollar goes up. If they're feeling risk on, dollar goes down. So it kind of gives you that visual of how the market's really feeling. That's what you look at it for. And what does that mean? That means just because the dollar goes up or goes down doesn't mean that everything else is necessarily going to do the opposite at the exact same time. There's a lag effect because you have market participants, right? And they decide when enough is enough. And that's always different for everybody. So, yeah. Let me see here. So, yeah, it's kind of where we're at with all that. Let me see here. Let's do this. Let's kind of zoom out here a bit. I don't think we're going to get much. This is the Coinbase charts. This probably only goes back to 2016 or so. Yeah, 15. I mean, that's a pretty good looking chart from that pullback there, 2015. So there's your 2017, 2018 bear market bottom, 2019 June, March of 2020. And then you get back up here in April of 21, June, November, January. We go. Again, breaking out above that 1 month right there, pivot, sets up for a breakout above the all-time high. And if you do that, you should expect to run up to the R5 pivot. Generally, that's how it works with pivots. So if we get this breakout above the monthly pivot and especially above the all-time high up here, this is that swing high just after it or just prior to it, that opens it up to run through the R pivots all the way up here. And so, yeah, on the monthly here on Coinbase, that's right around 146, I think, 148. 149. 1,000. I'll probably pop up a bit more at least than that. So like I said, looking at this as a 1, 2, 3, 4 as a triangle and 5 still coming up, that gives you that minimum expected target in the low 90s there. But again, this is typical of what we see at the end of Bitcoin. So I would expect kind of the same thrust, especially coming out of a triangle. So my expectation is we're going to see over 100, to finish this push up higher here. So yeah. So, this is kind of where we're at with that. As you can see here on the monthly, we almost bottomed out and oversold here. We're curled up trying to cross bullishly. So we've got another, what's today, 22nd? So we've got another 9 days or so left in the month. So if we see this continual breakup like I expect, then this monthly is likely to cross bullishly down here. Let's see here. Let me look at the MACD real quick. I haven't looked at that in a while. Let's see. Yeah, so this may be the very bottom here of this on the monthly with the MACD. As you can see here, you're kind of curling in some here. So you had this bigger move down. Now you're kind of curling less steep there. But let's zoom into like the weekly. Look at that weekly. So the weekly, is showing again, you've got higher lows here. You've got higher lows here. You had this bearish divergence at this point right here, which sent it down, which is what you would expect. But coming off the bottoms here, we're doing what we expect. The MACD is confirming what's going on with price action is what I'm trying to say. And you've got the weekly curled up, trying to cross bullishly, nearing that zero line cross there to get on the bullish side. And there's the daily. You got lower highs off that. Lower highs off that makes all the sense in the world. We've, zero line crossed here. We're heading up here, kind of doing a little bit sideways, but should potentially break out higher there as we move up on the weekly. Again, volume. I talked about this. You've got this triangle forming here, and you've got volume dropping off. That's what you expect to see. You have the volume printing here, or the triangle printing here on the daily. Right here. That breakout of that area there. So yeah, I mean, not all, the MACD is kind of confirming what we're seeing with everything else going on there. So yeah. So now right now we're just looking for a breakout above this right here. It's 43,239.61. Minimum expected target of 44,264.90. Probably closer to this 44,723 to 44,905 area for that wave 3. I think it's going to go up here toward this one, that area. So, yeah, okay. So, I mean, that's kind of what we're looking at there. Where is that important pivot? 48K. You're talking about on the monthly? Let's see. Yeah, right around 47, 48. 47 and a half, 48 right there. Yeah, yeah. Which, again, my idea, is basically we hit that, we break out to the 53 or 57 kind of area for wave D, and then we pull back to the upper 40s, lower 50s for wave E, and that would make a lot of sense here, right? So you get A, B, C, D, E, retest that pivot as support, boom, break out. So I think that's probably what's going to happen, right? So yeah, I mean, I think, I think that makes the most sense right now. We do have, again, this hidden bullish divergence on the monthly here that I talked about previously between June of 21 and January of this year. Got higher lows. We've got lower lows on the oscillator here. Hidden bullish divergence, looking for the breakout higher. So, Bitcoin doesn't have anything to do with stocks. I know everybody wants to say they want to talk about correlations and whatnot, but again, they're both Bitcoin and stocks and the dollar are all responding to risk on, risk off attitudes in the market. And so you might say, oh, well, if that's the case, then if it's a risk off attitude, then stocks should go down and Bitcoin should go down. Well, yeah, generally. But again, Bitcoin, the thing that Bitcoin has going for it is it's that newer market. It's a smaller market than, say, legacy stocks, It's this, I guess the best way to explain it, it's a new thing that everybody all of a sudden wants to get into because everybody's showing all these profits that they've made, right? So that gets people more willing to put money into Bitcoin than, say, stocks. At least as far as why it would continue to rally in a more risk off. But remember, it's not just that the environment is risk off or risk on. It's degrees of risk on or risk off. And so because it's in degrees, because there's not some one point that says it's definitely risk off here or definitely risk on, that leaves markets to decide just how much they're going to continue to move within that particular environment. And so then that comes down to, okay, well, what makes that market special, right? And that's what we kind of look there. If Bitcoin's going up, alt should go up. Rising tide lifts all ships. So in general, if Bitcoin's rallying, your other alts in general should rally. Now, there's going to be some that buck the trend, some that don't do that well. And then, when Bitcoin goes down, there's always stock, there's always stocks. There's always crypto that goes the opposite direction, right? Again, during this drop here, BNB, right? From Binance was the big thing. BNB was rallying up while Bitcoin's dropping down, right? Here, it was as Bitcoin's going down, Link was going up, right? So you've always got some. And it's the same way with the stock market. In general, most everything's going to go down if it's going down, but there's always going to be outliers that go up in the face of it. During 2008, when everything was going down for the great financial crisis, Dollar Tree, I believe it was going up just significantly. They were the winner of 2000, of that great financial crisis, of this stock market turndown. There were other stocks that went up as well, but they were the clear winner. They were the ones that really they were a big company and they continued to rally on up higher even in spite of that. But look at what they were, right? Cheap products. And then, the stock market dropping down, everybody's kind of losing jobs and money and whatnot, and they're worried. Spend less money. Why spend, $8 for your stack of paper plates when you can spend $2, right? Kind of thing. So, yeah. Anyway, so there we go, guys. It's 12:30, so I'm going to get out of here. I hope you guys have a safe week here trading, both, trading and out there in person and whatnot. We still got a lot of stuff going on around the world. Stop listening to the news mongers out there and fear mongers and news people and whatever, trying to associate price action with news events. The best they can do is maybe a knee-jerk reaction, but that doesn't change the overall trend of what's going on. That stuff is already in the charts. The charts tell you what the social mood is, and so it's social mood into the charts, and that's how it works. It's not the other way around. But everybody else you listen to is going to tell you that it's charts define that social mood, and it's again, it's not the way it is. How many people actually look at the charts, guys? When they're doing really good, they're at the end of a bull market. It seems like everybody's looking at it. Of course, it's not. But most of the time, there's very few of us out there in the grand scheme of things who are actually looking at the charts. So why would the charts tell us? Why would the charts affect the market's overall mood, right? Doesn't make sense. All you have to do is think, guys. That's all we have to do. Stop taking, for granted the sound bites that are given by, the ones out there making the most noise. If you can do that, you'll be a lot better off. All right? Okay. Hey, listen, you guys, like I said, you be safe. Remember, the only thing you control in the market is how much you lose. So risk management is still the very much most important thing, excuse me, you'll ever do as a trader out there, okay? That said, I'll be back on Friday, 11 a.m. Central Standard Time. So hopefully you guys will show back up, or better yet, excuse me, sorry about that. Better yet, join us here. howtotradetowin.com. Well, this is texaswestcapital.com. Click on that right there. It'll take you right to it. You can get signed up with us. Tier 3 is the place to be. I'm telling you guys, you're going to get more information there in a much shorter bit of time, more understanding markets than you're going to anywhere else. So we're there. Follow me at TX West Capital on Twitter. I don't post a lot, guys, but when I do, it's usually something worth paying attention to. So you won't get a lot of the memes and nonsense that you get from most of the people on Twitter. But again, when I do post, it's usually something you should be paying attention to. That's why I post it. All right? All right, y'all take care, and I will see you either in Discord or on Friday.